Morning. Hopefully you're doing very well. Well, September we're likely to see a rate cut in support terms. We are expecting interest rates to be getting low, which we think is a good thing or maybe a necessity, and not really that a good thing in support terms. Well, I think Trump's prayers are gonna be answered very soon because after the July report, we had that almost 250K jobs were slashed, and just having over 73 jobs attained just in the month of July. To understand what's taking place, we should understand that the job report is one of the factors that uh, could just near impact the Jeremy's Paul to have a reason for cutting down interest rates. So we should try to understand that the job report that we had last month and the inflation that we had, it was slowing down. Well, it wasn't the best. Like, for example, we should try to understand the core personal expenditure or the core personal consumer expenditure, the PCE or the core PCE. That's known as the core inflation. Uh, the Fed had the Fed has a goal of having it, or a target of having it to be around 2%, but as of today, it's going for around 2.8%. We should try to understand that with this or adjustive wise, it's not yet attained its goal of the 2%. However, 2.8%, that's still high. But regardless the situation, the economy looks like it needs a rate cut, like because the economy is slowing down. Like, it's highly slowing down. If you look at the consumer price index, it's going around. I think from sure almost it has been lower than almost less than 3%. We last saw the consumer price index that was almost in April of almost 2024. It has been always around 2.8, 2.7, 2.8. You know, even the consumer spending has been going low. Yes, it has been showing bumps. It's better than uh, June from July, but it has been slow. It's the boost in the economy, it has been way slow. Like, the way people are spending money is not the best adjustively to understand how the US economy should be looking like. But to understand this, we should try to understand that the main factor why we are expecting to see uh, uh, a rate cut in simple terms is one, the job report. The moment you saw the job report almost attaining 73 jobs attained, see, the UK, the US economy to be going to be to cope up with the growing population, they should have at least 100K jobs attained every month. But over 250K jobs slashed, that showed a slow response or even a decline, a real backlash in the US economy. Many analysis looked at this as that the US really needs a real emergency interest cut. In simple terms, at least a 50 basis point or a 25 basis point in the beginning. But we should try to understand that what's the impact of this? Because today we're having the Trump tariffs with the Switzerland going for almost 39%. We are having what they call the China US tariffs. Okay, those are kind of stable today. But in the long run, we're not really that sure. We have the aluminum and steel tariffs that almost 50% from any country. See, if you're an American and you think like these tariffs are only impacting the other countries, like, let's say foreign countries, well, these impacts impact you, actually, you mostly as a consumer, because the promised jobs that are gonna be coming out of the tariff deals that foreign countries like Japan, the Europe, and the UK are gonna be investing money in the US. All those are depending on the private economy. In simple terms, they're just highly depending on the private economy. So regardless after the interest cutting the interest rates, expect high prices for goods, expects homes going high. But however, you're gonna have good advantages like auto loans will go low. There'll be circulation of money. Stocks are likely to be going high and high. They might look overvalued today, but trust me, I feel like it's still going high because the moment we see, if you look at the how the stock has been performing for the last 2 to 3 years, it has performed when you don't expect it to be performing like that. Because there has been money circulation since COVID, I would say. But we should try to understand that low interest rates also comes with a big risk. We are gonna see the US dollar going low and low these important times. We're gonna see the US dollar going over today's running around 97. It has almost spent over 2 months being lower than actually 3 months being lower than $100 in the DSY or in the dollar index. So today's running around $98, $97. When we see rate cuts, you expect to see 2 or 3 things important. You're gonna be seeing the dollar getting the value, which is an advantage for the home manufacturing companies because it will make US goods to be competitive to other foreign countries so that their goods are kind of affordable. However, in the long run, see, many may say the US dollar being a weak dollar is good, but to you as a home consumer, that means you're gonna have to spend more dollars to afford, like your purchasing power is gonna be lowered, taken down in the short run. Like you as a US citizen, whenever you hear that the dollar is getting low, just know like you have to use more dollars to buy something or to attain something or to purchase something. Meaning your purchasing power is gonna be getting low and low. Expect if the tariffs are likely to be getting high and high, expect high prices. Uh, so, whereas the lowering of the US dollar or devaluing that's taking place sometimes because we're also expecting the treasury is likely to expect to be borrowing almost $1.6 billion before the end of the year. If that money isn't well attained through the bonds and everything, expect more devaluation of the dollar. It's not the best place, I would say, but yeah, the future is to tell because we have to understand lower interest rates doesn't save the US dollar from the overspending. If you want to save it from the big US debt is having the $37 trillion, and we should try to understand that the US dollar isn't. See, lowering interest rates helps the US economy to be boosting how the economy functions, but not in the long run. There are factors that should be taken carefully. However, for now, a rate cut is needed. Yeah. Thank you for watching. See you in the next one.